right, so today we're diving into the Singapore stock market.
Sounds good.
Specifically, kind of a quick snapshot of what happened today, Wednesday, November 6th, 2024.
Okay.
And the market opened higher today, so we're going to see what's driving, noteworthy for investors today.
Right.
So the Straits Times Index, which is the STI,
Yeah.
is up slightly by 0.1%.
Okay.
And that's kind of a continuation of what we saw yesterday as well.
Mm-hmm.
And just looking at some of the, the big names we see, Capitaland Invest, Genting Singapore, Semcorp, Cetrium, Singtel, all up about 1%.
Wow, that's pretty good.
But,
But
there's always two sides to a coin, right?
yeah.
So,
So some companies didn't do so well.
exactly.
Like NIO dipped 1.7%.
Okay.
And Olam fell even further, like 3.3%.
Oh, wow.
Yeah.
So one company that's really making headlines for a kind of unsettling reason is Singtel.
Oh, really? Why is that?
So it came out that they were targeted by Chinese hackers
Oh.
back in June. And there are reports suggesting that this was kind of a test run for bigger attacks on U.S. companies.
Oh, wow.
So, it's kind of scary to think about the ripple effect of something like that.
Yeah, absolutely. I think this really highlights how important cybersecurity is becoming.
Mm-hmm.
Especially for a company like Singtel that plays a critical role in infrastructure here.
Right.
So this attack raises some serious questions about, how vulnerable they are and what could happen in the future.
And what's really fascinating to me is that despite all this news, Singtel's stock price is actually up 1.3% today.
That's interesting.
What do you make of that?
Well, it could be that investors are, focusing more on other positive things that are happening with Singtel
Okay.
that are maybe outweighing the concerns about the cyber attack for now.
Gotcha.
Or it could be that investors are betting on, Singtel's ability to fix these security issues and come out even stronger.
Right. Yeah.
Yeah, so it'll be really interesting to see what happens.
Totally. Let's shift gears now and talk about some other companies that are making waves in the market today.
Okay. Joke.
Starting with SIA Engineering.
Yeah.
What's fueling their recent performance?
Well, they've got strong Q2 profits.
Okay.
And it's mostly driven by the demand for aircraft maintenance services. Which makes sense, with the travel industry rebounding and with those ongoing delays in new aircraft deliveries.
So airlines are having to keep their older planes in service longer.
Exactly.
And that means more maintenance and repair.
Yep.
So it's not just people going on vacation. It's also, these supply chain issues that are creating this opportunity.
Right.
All right, let's talk about Capitaland Invest.
Sure.
What's going on with them?
So their total revenue went up a little bit, mostly from fee income.
Okay.
But their real estate investment revenue actually went down.
Huh.
So this could mean they're shifting their strategy,
Yeah.
maybe focusing more on services instead of direct property investments.
Yeah, that's interesting how they're kind of adapting to this changing real estate market.
Right.
Speaking of adapting, how's Frasers LNC Trust doing?
Oh, FLCT. Yeah, so it's kind of a mixed bag with them.
Okay.
They had revenue growth, but their DPU, which is distribution per unit, went down because of rising expenses.
So is that like a sign of bigger problems in the real estate sector, or is it just them?
Yeah, that's a good question. It could be, things like interest rates going up.
Yeah.
And inflation affecting property management costs. So it's something to watch.
Definitely. All right, let's move on to a more positive story. SingPost nearly doubled their net profit.
Wow, that's amazing. How did they do that?
So they had really big growth in both Australia and Singapore,
Okay.
which, shows the strength of the logistics and e-commerce sectors.
Right, all that online shopping.
Exactly.
Keeping them busy.
Yeah, and lastly, let's touch on Manulife USD.
Okay.
So they had a dip in occupancy rates after they sold a property in California.
I wonder what's going on there.
Yeah. What's the strategy behind that?
Well, it could be that they're responding to the changing office market.
Like with more companies doing hybrid work.
Exactly. So maybe they're adjusting their portfolio to fit that new demand.
That makes sense. So it's like a strategic move.
Right.
Wow, we've covered a lot today. Cybersecurity, real estate, e-commerce.
Yeah. It's a lot for investors to think about.
It is, for sure.
Yeah.
But it's all fascinating stuff.
It is.
And it's important to understand these trends.
Absolutely. By breaking them down and understanding what's driving them, we can get a better idea of where the market's headed.
Yeah, and what opportunities and challenges might be coming up.
Exactly.
Yeah.
Yeah, it really shows how important it is to, stay informed and look beyond just the headlines.
Yeah, those numbers can be deceiving.
Exactly.
So as we kind of process all this, What would you say are the biggest takeaways from today's market? What should investors really be paying attention to?
I think the most important thing is to look beyond the headlines.
Don't just react to like a one-day drop or something.
Exactly. Look for those bigger trends.
Yeah, like connect the dots, basically.
Yeah, and be curious, like keep learning.
Exactly. And, there's no right answer for everyone when it comes to investing.
Right. Everyone's different. You have to think about your own goals and how much risk you're comfortable with.
Yeah, and do your research.
Absolutely.
Well, it's been great talking to you today.
Yeah, this was fun.
I always learn something new.
Me too.
Thanks for sharing your expertise.
Happy to do it.
And to our listeners, thanks for joining us on this deep dive into the Singapore stock market.
Yeah, thanks for listening.
We hope you learned a thing or two about what's driving the market.
Yeah, and that you're feeling a little bit more confident about making those tough investment decisions.
Until next time, happy investing, everyone.
See you next time.